Let's try to answer our question, when will the Fed start cutting rates? So we'll look at the Fed Rate Monitor tool and the CMA Fed Watch tool to look at the various probability predictions as to what's the Fed going to do in their interest rate decision this week as well as going forward. Just a quick reminder, you can find links to these tools in the notes and also on our homepage under the reference links section. So we have links to tools, resources we frequently use, and you can find links to those tools in the reference links section on our homepage at any time. So again, highly recommend you bookmark our homepage. You can jump there, get access to these tools and resources at any time. Also, we've done several videos on how to use the Fed Rate Monitor tool and how to use the CME Fed Watch tool. So you can listen to those videos in more detail via the direct links in the notes as well as on our BeachBum Trading YouTube channel. So first we'll look at the Fed Rate Monitor tool. So you can see we've got a countdown clock when the next Fed interest rate decision is, January 31st at 2. We can see what the probability is. So right now the probability is very high that we're going to stay the same at 5.25 to 5.5, just a very 3% chance of a cut. So very low probability, of any change on, this week. And that's, again, what I would propose. No change, no cut, no hike, just a lot of discussion, about being data dependent. So then we go out to March. Again, we're trying to see, when is the Fed going to cut? And you can see the market is currently predicting a 46% chance that they're going to do a 25 basis point cut as early as March. So again, I personally think that's overly optimistic. I don't think they're going to cut that soon. And also several of the Fed officials have come out and said, when they're not going to cut till the second half, possibly as late as the third quarter. Again, just another opinion of mine, not financial advice. But I think we're definitely not going to get any cuts before the second half. Again, it will be very data dependent, but we also have the election this year, and I think they're not going to want to appear political, so that if it seems like they're going to need to do one or more cuts, I think they're going to justify that, strongly with the data, that it is a data-dependent decision, and they're not going to want to appear political. So if they do see more than one cut, I think they'll cut early, maybe June, July, and then, they don't want to do it right before the election, as that might appear to favor one candidate or the other, whether they cut or don't cut. Again, I think they're going to stress that it's data dependent and do all they can to make it appear that it is data driven and not at all politically motivated. So if we go out to May, we can see 50% chance that they're going to do a quarter cut, 36% chance they're going to do 2 quarter cuts or half cut. Go out to June, and now we've got, 50% chance they'll do 2 cuts, 34% chance they're in 3 cuts. July, high probability that they've done multiple cuts. Very low probability that they stay the same. Low probability of only 1 cut. So again, market's continuing to be pretty aggressive, and that, they're predicting multiple cuts between, May and July. Now we've got a full point cut, so there's 27% chance that they're going to do a full point cut by September. again, Fed's dot plot, the Fed officials have predicted just 3 cuts, so the market again is being, in my humble opinion, overly aggressive at both the number and the rate of cuts. So again, then we see now we're more than a point cut in November, and by the end of the year, got a pretty good probability, a point or more, so 4 or more cuts by the end of the year. And, I think this is the 5 or 6 cut camp, is as high as 13%. And, almost minuscule chance that they will not have cut by the end of the year. So you can see, again, I think the market's being overly aggressive in both the number of cuts and the probability, the rate of cuts. And I think even this week when Fed President Powell comes out and starts talking, I think there's going to be a significant readjustment in both these probabilities and the rates. I think they're going to move out farther and, fewer cuts and not as soon as currently predicted. So again, we could get, a pretty dramatic reaction in the markets. It will be a negative reaction as the market is estimating, more and faster rate cutting than what the Fed officials are saying. So if I use the CME FedWatch tool, again, it's got a clock. We can count down clock. And very similarly, we can see the various predictions for the various meetings pretty quickly in the FedWatch tool. So we can see, very high percent chance of no changes in January. Go up to March. I guess I'll have to zoom this out a little bit. Hopefully it's still legible. So again, 46% chance of one cut. Go out to May. Now we've got 50% chance of one cut, 6% chance of two. Out to June. So now possible 2 cuts, 34%. Well, to July, now we've got more than 2 cuts already in July. So again, Fed officials are saying 3 for the year, and the market's already predicting they're going to get 3 by July. September, we start to get into 4. November, now we're down a whole point. And no chance we're at where we're at today. Minimal chance we've only had 1 cut. Again, by the end of the year, the minimal chance is, 2 cuts or more. The probability is a point or more, so 5 or 6 cuts. So again, I think the market's, again, over its skis. I don't think we're going to get that many cuts, and I don't think we're going to get them as rapidly as what the market is pricing in. So I think we're going to get negative reactions as the market has to readjust. Bond yields probably go up. Again, market probably do some selling off. Particularly your interest rates sensitive sectors will have a negative reaction. So solar, utilities, etc. So let me know what you think. What do you think? When will the Fed start cutting? We saw what the Fed rate monitor tool says, the FedWatch tool says. What do you think? What are your opinions? Let us know in the comments and our Discord, etc. So I also want to look at and talk about the January barometer and what that says in terms of the market performance for this year. But let me grab a quick drink and then we'll also look at that. So at the beginning of this month, we took a look at and talked about strategies about how to make money trading in January, and you can review those strategies and our discussions via the bonus link to that video in our notes. We also released some shorts on how the markets typically perform in January, best performing sectors and industries. So again, you can review, see how this January performed relative to those historical predictions. Talked a lot about, the January effect. Again, all of these talk about how January is typically a positive month for the market, one of the best months for the market. Typically, historically, the markets go up about 1% in January, and then we'll talk about February as well. So we've also got some where we reviewed, January, February, March. So you can listen to those as well. Again, January tends to be positive, and then February not so much. So again, we might see a sell-off going into early February. We may have started to already see that on Friday with the profit-taking sell-off in some of the mega cap techs. Now I want to look at the January barometer for this year for 2024. You can listen to what is the January barometer, what does the performance of January indicate in terms of the performance of the markets for the year. And again, you can get all the details, the historical basis for the January barometer in our previously released video. I want to see how did our markets perform this January relative to historical predictions. And you can get that information on the performance tab of the major world market indices and investing.com. So we'll jump over there. Look at the performance. So if we look at the US markets, we could see for year to date. So for January year to date, the Dow was up 1%, NASDAQ 2.4, the S&P 2.5, NASDAQ up almost 3%. The only negative was small caps. The Russell was actually down for January. VIX, a little bit of positivity. So again, the January barometer says that based on the performance of January, what can we expect for 2024 for the year? So it bodes positively for the Dow, S&P, and NASDAQ, not so much for the Russell. And typically, the January effect, part of that is a buyback of some of the tax loss harvesting. Typically, your big losers, your laggards, and typically a lot of those are small caps. They didn't get as significant of a January effect as they sometimes do, so that doesn't bode very well for small caps. So again, based on the January barometer, it bodes, pretty positively for 2024. So we'll see how that January barometer predictability pans out this year for 2024. Again, you can also review other global world indices in this tab, major world indices on investing.com. You can even, sort them by level of performance. So if you want to see, year to date, who is looks like Turkey, Japan were the top performers, Budapest. So again, you can see who were the top performers year to date in January across the globe using this major world market indices performance tab in investing.com. So again, I hope that all helps. Welcome, Douglas PC. Thank you for joining us. Hope you're doing well. So again, you can listen to, expected behavior of the markets for the rest of the winter. So again, February tends to be slightly positive, but dramatically less positive than January. So we could again expect some drop off, some profit taking since we've been near all-time highs. Going into February. So definitely, be prepared, stay safe, protect your profits. Tomorrow we'll also look at dividend paying stocks, and we'll look at several option strategies, additional ways. Again, if we expect some underperforming February and you want to generate income while we're waiting for the markets to bounce back up in March, then dividend payers and some of these option strategies are additional ways you can generate income while we wait for the markets to rebound. So if I missed your question, I apologize. Please throw your question back up in the chat. Or if you have any other ETFs you want us to look at or any other topics you'd like us to discuss for a couple minutes, so we can do that. We'd also love your feedback on how we may improve our weekly trading game plan videos, any of our videos, any of our content, our tools, our Google Sheets, etc., our community, our Discord. What can we do to add more value for all of our Beach Bum traders? So we'd love your feedback in the comments below. In our Discord, again, our Discord's free to join. We've got a suggestion box channel in our Discord, so you can give us those suggestions there. Again, also in the comments, and you can also find links to all of our social media profiles in the link section on our homepage. Our homepage is beachbumtrading.com, bum without the U. And again, you can contact us any of those ways, provide us feedback if you have questions, if you have any requests for stocks that you'd like us to look at. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our Beach Bum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new Beach Bum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new Beach Bum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the Beach Bum Trading Community Discord server soon. Wave and say hello. Beach Bum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the beach bum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new Beach Bum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow beach bum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.